Is Sprott causing a uranium short squeeze? So back in March or April, when it was announced that Sprott Inc. was going to buy the Uranium Participation Trust and turn it into the Sprott Physical Uranium Trust, I figured that Sprott would want to accumulate more physical uranium. And really, in less than a month, Sprott has acquired an enormous amount more of physical uranium. The uranium spot price, as you can see with the chart there on the right-hand side of your screen, has gone up a lot. In just the last couple weeks, there's been a big spike. The uranium mining shares and juniors have correspondingly moved up as well. Although there's an article for patrons out, I think there's going to be massive share dilution with the juniors in the not too distant future, along with reverse stock splits. The share structure and capital structure for a lot of these uranium juniors is going to be an absolutely enormous mess if they try to raise a massive amount of capital and bring on a uranium mine in the next couple years. But at the end of last week, the Sprott Uranium Trust announced that they're doing another shelf offering to buy up to $1 billion worth of more uranium. They're going to sell more units to do that, very similarly to how the Sprott Physical Silver Trust works, except that there won't be physical redemption of uranium. But the Sprott Physical Uranium Trust has already acquired over $200 million worth of uranium to store in the trust over the last 3 or 4 weeks, and they could potentially go buy another $1 billion worth of uranium in the not too distant future. So this has put in a bottom in the uranium market. For all intents and purposes, the uranium bear market is over unless there is another Fukushima type accident, and even then there is massive supply problems in the uranium market on the supply side unless new supply does come back online in the not too distant future. However, a lot of potential new uranium mines will need $50, $60, $70 per pound uranium staying at high price levels for those mines to be economic. Patrons were told back in February that the uranium market was showing signs of bottoming, and this was before Sprott bought the uranium participation and turned it into the Sprott Uranium Trust and started buying over $200 million worth of more uranium, and then issuing this new shelf offering where they could potentially buy up to $1 billion worth of more uranium for the trust. So Sprott is really trying to help put in the bottom and raise the uranium price so that more uranium supply can come back online. I know that Rick Roll, before he left Sprott, he had a lot of investments in a lot of uranium companies, and Sprott long-term is still bullish on the uranium price. Otherwise, they would have never bought the uranium trust. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now 29 new articles out in the last 13 or so weeks, all for the cost of a Starbucks cup of coffee, only $5 a month, exclusive for patrons over on my Patreon page behind the paywall. There is a lot of interesting content about global macro, companies, and sectors, including a uranium article talking about the share dilution that's going to come with the uranium spot price running up and with uranium junior mining shares running up and the sector being so starved of capital. And as an added bonus, I will probably, and there may be more of this in the near future if this receives positive feedback, there may be an audio podcast where I go through the investor presentation of a uranium junior talking about pros and cons and what to look out for. So look out for that in the next week or so if you sign up for my Patreon or you are already a patron. There are over 180 articles, charts, and audio podcasts behind the paywall exclusive for patrons. I think it is one of the best deals out there. No one in this space charges less than me for premium content. I think it's a good deal, win-win, where people chip in for content because YouTube is not going to pay any of my bills no matter how many videos I make. YouTube will make sure I get less and less each month. That is just how things are. And the other video upload websites are actually even worse than that for paying content creators. So if I could wrap up this short little video very quickly, there are a lot of signs in just the last couple weeks that Sprott is trying to create a short squeeze in the uranium market. But what I would look out for, though, is the share dilutions that are going to come from uranium juniors. I've warned about this already for patrons. There's going to be a lot of really bad, really nasty share dilutions, and then the management teams at these companies will paper these things over with reverse stock splits. A lot of these potential new uranium miners need hundreds of millions of dollars raised to bring on new uranium mines. So other than current uranium producers like Kazatomprom and Cameco, a lot of these other potential uranium producers cannot easily restart their uranium mines. They're going to need a lot more capital in order to do so, and you're looking at years potentially for new uranium supply to come online. Also, depending on the country, there are a lot of permitting issues for uranium mines and nuclear power because of the radiation and storing the radioactive waste.